Hello, everyone. This is Greg Gossett with Gossett Trading and Mentoring Live, and today is Friday, July 12th, 2019. We are now in the final week and the final hour of the trading week. Anyway, it's been an interesting week, done pretty well. I just want to make sure everyone can hear me okay. So as many of you know, I believe in my opinion that the prices, as close as you can get them to the close of the day, are the most valid prices, and therefore those are the prices that I make my buying and selling decisions from, whether to enter a trade or whether to exit a trade. So anyway, let's just take a look here. If you guys could just let me know if you can hear me okay, just to make sure we're coming through okay. I think we are. Yep, I think we are. So, okay. Well, I hope everyone's doing well. I appreciate you coming by and spending your time with me. I really do. I hope you're learning something from this channel. And, you're kind of taking some positive things away from it. So the plan for today is, first of all, we're going to run the U.S. legal disclaimer. Second of all, we're going to go ahead and we're going to look through my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to come back. We're going to do just a few minutes on a little bit of trader psychology. And then we're going to go through my watch list. We're going to go through each stock. We're going to look at the technicals. We're going to take a look at support and resistance levels. We're going to take a look at moving averages. We're going to take a look at volume. We're going to take a look at ATR channels. We're going to take a look at MACD, take a look at RSI. We're going to try to fit that puzzle together and see if those indicators will line up and give us some kind of potential entry for this afternoon near the close. And then after that, after the market closes, if you have any questions at all about anything I talked about today, please let me know. Or if you have any questions about a particular stock that you're in, you want me to take a look at the technicals, I'm happy to give you my humble opinion as well. So let's see. JT is here. Hey buddy, how you doing? Good to see you. Michelle Champneys, my goodness, how you doing, my friend? I did not expect to see you in here. I'm really glad to see you. Thank you for coming. I appreciate it. And I guess you can hear me, so that's good. All right. Well, hey, before we get to the legal disclaimer, just want to go over, it looks like we're having a big day in the market. The Dow Jones is up 182 points. That's 0.68%. The NASDAQ's up 39.54, up 0.48%, and the S&P is up 9.5 points. That's 0.32%. So the clear winner today are the Dow stocks. So, all right. Well, we got a lot to get through today. So let's go ahead and just run that legal disclaimer, and I will be back in 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, Chris F. Good to see you. Happy Friday to you as well. So, all right. Well, I'll tell you what. Let's get to it. And first of all, let's go through my current positions. We'll talk about where we bought them, why I bought them, when I bought them, and how I'm going to manage them going forward. So, all right. So we did buy AGQ. AGQ is silver. It's a double leveraged silver. We did buy it back on July 10th. At $24.39. We bought it because we had a 520 EMA crossover. And as you've heard me talk about, the 520 EMA crossover on AGQ is a good, profitable, long-term, back-tested approach. It does not win all the time. It has a lower winning percentage of the winning than when it actually wins, but the wins are much, much larger than the losses. And really, in trading, that is really all we care about. Not our winning percentage, but how much we win when we win and how much we lose when we lose. So I did buy it here yesterday at 24.39 when we had the 5 close over the 20. Yesterday, immediately we went down against us. However, the 5 stayed above the 20-day. So it keeps us in the trade. Today we're having a nice day back up, which is really good to see. Did hit one profit target today here at 24.29. So, with this trade, this is an easy trade. I'm either going to, one of two things are going to happen. One, the 5 is going to cross back below the 20 for a small loss, or, if we're lucky enough to get a nice trend to the upside, I will continue to phase out partially each day until I run out of shares. So that's the plan. Either the 5 crosses back below the 20 or I phase out as it moves my way. So this is a good sign today to have a nice strong day up like this, and again did hit one profit target. All right, IWM. So this is another mechanical back-tested approach. I trade this like a robot. No discretionary trades are going to be made with this. This is just a long-term approach. This is when the 10 SMA closes back above the 50 SMA, and this is one of the best back-tested crossover approaches for the Russell 2000. So we did buy back here on the 28th of June at 155.88. The next day immediately went our way in a big way. We sold about 25% of the position up here. Immediately reversed on us, but the way I phase out is, if regardless of where I am on the trade, if the market moves up in a particular day, I will take a percentage of profit up. So we did hit one profit target here, we did hit one profit target here, and we did hit another profit target here today at 155.74. We're getting very close to hitting that second profit target today, so we'll see if that triggers. So anyway, this has been a nice profitable trade. It has not moved much from the entry point, but because of the way I phase out, we have got some phase outs at the higher level. So again, this is a mechanical trade, not a discretionary trade. I'm either going to stay in this position as long as the price moves up, and I will phase out and phase out and phase out. I usually phase out of about 10-12% at each one of my profit targets. To the upside, I'll phase out until I don't have any shares left, or the 10 crosses back below the 50. So again, mechanical trade, paint by the numbers, but back tested, the back test on this 1050 IWM really beats buy and hold and really beats the market. So we'll see what happens. Oh, looks like we did hit a profit target. Let me just take a look. Sorry about that. 156.57. Yep.
Order filled.
All right. So that is taken care of. And then actually I trade this other account too, so I'm going to have to hurry and do that in the other account. All right, well, that was nice.
Order filled.
All right, good enough. We can mark that one. Yeah, we're having a good day today. Nice profitable day. All right. So that's IWM. Let's get back here now to our next one, which was Philip Morris. I did buy Philip Morris back on July 10th. And why did I buy it? Well, for two reasons. The big thick black line here, this is the 200-day moving average. As a general rule of thumb, You're better off being in a stock when it closes above the 200-day than below the 200-day. And that's because a lot of traders, a lot of investment banks, they key off of the 200-day. It's a good policy to be in when you're above and out when it's below. So why did I buy it back here? We bought it back here at 80.28. It's been a really nice trade so far, but the reason why is because previous day we closed below the 200, then we closed back above the 200. But in addition to that, we had a V2 entry. Now remember, a V2 entry combines 3 bars. Day 1, day 2, day 3. Day 2 has to wash out or go below the low of day 1 by at least a quarter ATR. And then the day 3 has to close back above day 1. So this was a double confirmation for me to take this trade. Close under the 200, close back over the 200, and then the V2 entry. Day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. We hit 2 profit targets yesterday, as you can see, and immediately went our way. Today we hit another one closer to the top of the day. So, it's going well. The key here, though, is now that it has been, it's extended from my entry point, how do we want to manage this trade so we don't give back a lot of the profits? So we have about 70% of this trade left. We phased out 20% yesterday, about 10 today. So we're in that range now. We've moved far enough away that I don't want to give it back all the way back. So probably the way I'll handle this trade going forward is if we go to the upside and we reject the 100-day, we can go above it intraday, but close back below at the end of the day. That will be a signal for me to go ahead and lock in profits. If it goes up, closes above the 100, I'll continue to hold it above the 200 until it closes back, the 100, until it closes back below the 100. But if it closes above, I'll just hold it and I'll keep phasing all the way to the upside. If it turns around on us, I'll most likely just get out, let's say Monday, if we close below today's low. That's a bearish indication. It's a red flag. Because obviously if it closes below the previous day's low, that means it has stopped going up and is going back down. So, we've had a really nice profit on this. This has been a really nice trade. So we'll just go ahead and keep this. And what we do with it's going to be dictated by what the price action does. So hope that makes sense, but really glad we hit 3 profit targets since our entry in just a couple days. All right, the SPY. Let me just make sure. Hey, Johnny's here. Good to see you, Johnny. Yep, it is a nice green day. One weed pulled itself. Oh, did you pull a weed in your portfolio today, Johnny? I was talking yesterday about, you have to look at your positions as a garden, and if your vegetables or your flowers are coming up nice, that's nice. Let them go, or let them grow, right? Let them blossom. But when you have losers, yank that weed out of there, right? Keep that garden free of weeds. Keep your portfolio free of losers. So that's what Johnny is talking about. Dr. Jorgensen says, silver, interesting to see if it can go through the 200. Yep. It's definitely going to have some resistance up there at the 200, but we'll see what happens. Andy's here. Hey, Andy. Good to see you. Murat is back from Norway. Good to see you, Murat. Hope you're doing well. Stop loss triggered. Okay, gotcha. Well, good. But when you put it in that category of keeping the weeds out of your garden, like nobody wants weeds in their garden, right? And but with stocks, because people don't like to sell them, they don't want to take that loss, they don't want to lock it in. That's why they hold on to it, and they grow to be larger and larger and larger weeds. So when those weeds, when you have one little weed sprout, just get rid of it. Yeah, it sucks to take a loss, but literally, if it's a small loss, you're probably not even going to think about it later today, and you won't even remember what it was tomorrow. Dr. Jorgen says, I made money again. Good night. Yeah, he's talking about the S&P. All right, so in case we have some new viewers today, let me quickly go over. I do buy the S&P each day at the close. Every single day, I sell it first thing in the morning. So why would I do something like this? Well, it's based on this study from @Bespoke Invest. And buying the S&P at the open. So if you would have actually buy the S&P in the morning at the open and you sell it in the afternoon at the close, if you take that approach from 1993, you'd have actually lost 13.9% by doing that. But if you did the opposite and you bought the SPY at the close like we do, if you buy it at the close every day and you sell it first thing the next morning, since 1993, you'd have returned 634.2%, which is amazing, right? Because we know the market has gone up since 1993, but during the actual trading day, it has had a negative return, meaning that more than all the returns in the S&P, everything has come after the close. In the aftermarket, people bid up the prices, and they bid up the prices in the pre-market before the market opens. And what these numbers are telling you is that they sell right into the open. And that's exactly what we do. You can see the blue line here. This is the buy in the afternoon, sell in the morning since 1993. Pretty nice, right? The orange line is just the regular market hours. Buying in the morning, selling in the afternoon. You would have actually lost money. So, those of you who are day traders out there, please keep this in mind because, day trading is tough enough. Because you're fighting for pennies, not dollars. And, these statistics clearly show that the price movement does not come during the day, but in the after hours. And then Steve Burns, who's a friend of the channel, a very famous author and trader, educator, good friend of mine, he did a more recent study. This current study was to January to 19, the 634.2, and Steve did a more recent study a couple weeks ago, up to date to 2 weeks ago, 712.63% return. So it's very powerful information. I've been using it. It's been working very well. Please keep in mind there are drawdowns. I mean, yeah, if you would have started here, sweet, right? But if you'd have started doing this here, not so hot tamale, right? So it's important to use a small position size every day, something that you can use every day. Look at this as a long-term trade that you have to make a couple clicks with, but position size correctly. A 5% of your position size of your capital, maybe a 10% of your capital. I use a 10% capital every day on this, but it has been quite positive, profitable since I used it. And as you can see, I did buy the SPY here yesterday at the close, $299.31, and sold it again for this morning, just overnight, real quick trade for $299.86. So listen, this doesn't always work. Long term, the information is very clear that it does. There's a tendency in the market to bid this up in the aftermarket and the pre-market. But again, you could get in and start doing this at the absolute worst time. So please position size conservatively, treat this like a long-term trade. Hey, Steve Burns is here. I said Steve Burns' name and he magically shows up. That's awesome. The stock market loves to punish short sellers over the long term and day traders over the short term. Yeah, you're 100% right, Steve. Steve coined the phrase, forgive me if I say it wrong, but I think Steve said, I would rather go for the easy dollars than the hard pennies. And what he's referring to is swing trading, position trading, getting the easy dollars, but fighting for those pennies in the daytime, day trading. Those are the tough pennies. I mean, you're dealing with, you're trading against algorithms. You're dealing with the bid-ask spread. Your commissions are a larger portion of your profit. So, and then what I just showed you on the S&P, right? I mean, there's just not a lot of movement during the day. So nice to see you, Steve. Thanks for coming. Thank you for that nice mention on Twitter, as always. I really appreciate it. I'm just really appreciative of you thinking of me and putting me in that list. All right, Murat, I hope I'm saying that correct. How are you setting your profit targets and your phasing out percentages? Maybe you can answer after the sessions. Yeah, I'll talk about that after, but I do want to say, Murat, that in the description of this video, I have links to 4 different video lessons on YouTube. One of them talks about my 7 different trading approaches. The other one talks about V1, V2 entries. The other one talks about all the indicators that I use in my chart. And the fourth one talks specifically about how I phase out. And I go into great detail in that video about, where I set my profit targets, how I do the math to figure out the ratios of what percent of what price and of what percentage of my shares I'm getting out each day. So anyway, hopefully you can take a look at it. It's just in the description of this video. Steve says the screen time for day trading is not great quality of life either. Totally true. I mean, just sitting in front of your screen, having all those emotions, go out, go for a hike, or go do yoga, or watch The Price is Right. I don't know, but sitting in front of the computer all day is no bueno. Merritt says I see it now. Thanks. Okay. Let's see. So we will be buying the SPY again at the end of the day based upon the study that I just showed you. So here is our one loser for the day. We have 4 winners, 1 loser, so not too bad. It is the VIX. I did buy the VIX back here on the 8th of July, and the reason I bought it was the previous day closed under the 3rd ATR channel, closed under the 30 RSI. The next day it closed back over the 30 RSI, closed back above the channel. So that is a signal for me. It doesn't mean it's going to go up, right? But that is my signal because it gives me a good risk to reward. Next day, gapped up nicely for us, took about 30% of the position off, which is nice. So we did lock in a little profit here. Then it's come back down. But what's happened is, because we took 30% of the position off here, it mitigated the loss we have down here. So my stop on this particular trade was a close under the 30 RSI. Currently we're at 29.81. So this could be a photo finish for us today. So I'm going to have to watch this one. I'm going to have to watch this one carefully. All right, so those are our positions. AGQ on the 520 crossover, IWM on the 1050 crossover. Philip Morris, this is a discretionary trade, so just going to have to see what happens with this. But as it is right now, after hitting this one profit target today, totally fine with this. I will be keeping this SPY. Bought yesterday at the open, sold today at the close, so I will be buying this again today as normal. And then VIX 29.85, so we'll just have to see if this can close back above 30. If it closes back above 30, I am going to keep it. All right, so listen, before we get into taking a look at the charts, I do want to do just a few minutes on this. This is from Trading Composure at YVANBYEAJEE, or just Trading Composure. It's a really good site on Twitter. I'd recommend that you follow it. He has some really great information about trading psychology, which of course, as you know, I believe is probably 90% of trading. It's not the mechanical entries and exits and setups and technicals. I mean, those are important. You have to learn those, but really in the big picture, what's going to be your challenge going forward to be a profitable trader is the dealing with your emotions, dealing with your fear and your greed, making impulsive decisions. And so he does a lot about this on his channel. So I would recommend it. But he says it's okay to admire someone else's trading performance, but never compare it to your own. It's irrelevant. We all trade different methods, time frames, beliefs, account sizes, and objectives. And it's so true. You can't look at somebody and somebody says, hey, I made $3,000 today. Well, what does that mean? I mean, maybe he had $2 million account. It means nothing. But, don't try to compare yourself to how much someone else is making, how much they spend time in front of their computer, or they don't spend time in front of their computer. It's all relative to you and how you're trading. You may not want to hold something long term. You may want to be a shorter term trader, or vice versa, right? It's like going to the gym and seeing some really big, strong dude there, and you're like, man, I'm not even close to that. But you're still at the gym, you're still working hard, you're still doing your best. So it's not about account size. It's really what it's about is percentage of whatever you're starting with, right? So, and somebody might be doing really well when you see them doing, you see what they're doing at the moment. They might be doing really well, but may have lost money for the last 6 months, and you didn't know about that. So if you're currently losing money, but you're trading a good system and everyone else is making money, don't sweat that. Just let it go. I mean, there's all sorts of different methods to trading, and just because you're not in phase with the market at the moment doesn't mean you're going to be in the future. And what I see, I talked about this the other day, but a lot of people, they jump from system to system to system. They see one guy using this, oh, that I should use that. They jump on that. Then that starts doing poorly, and they see someone else doing using another approach, and they jump onto that. It's important that you find a good system, fits your personality, fits your lifestyle, fits your time frames, fits your schedule, and back test it, and then just stay with it, right? Don't worry about how other people are doing. People that are buying and holding right now are doing really well, right? Me as a swing trader, I'm doing well, but I'm not doing as well as them. But there's going to be a time, whether it's next week or later on in the year, where the market's going to go down, 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 possibly, and maybe I won't be in it, and the buyers and the holders are going to give a lot of it back while I'll be flat in the market. So again, this is Trading Composure on Twitter. It's okay to admire someone else's trading performance, but never compare it to your own. It's irrelevant. We all trade different methods, time frames, beliefs, account sizes, objectives. So keep that in mind. Just work on yourself. Don't compare to anyone else. And if you're doing your best, you're following your rules, then that's what you're supposed to do. All right. Hey, Mount Doji's here. Good to see you, Mount Doji. Nice to see you. All right. All right, well, let's go down through the watch list and see if there is anything today. All right, so Apple. Apple's doing well here. It's at a 60.38 RSI. It's a little too high for me to buy right here. There's really nothing I want to get involved in here. As many of you know, I prefer to take the majority of my trades within the value zone. And I actually made a chart that I want to show you real quick. Nope, that's not it. Here we go. You hear me talk a lot about the value zone, right? Well, the value zone are these two lines here. One ATR to the upside, that's one standard deviation from the midline or the mean, and a -1 ATR channel. I prefer, a lot of prices hang out in this area, and anything above the 1 ATR channel from the midline outside of the 1 ATR channel, it's difficult to get prices to go here. Not looking at this chart, you wouldn't think, right? But anything up in this range over the 1 ATR is more than one standard deviation away from the mean. That is considered overvalued. Prices below the 1 ATR channel are considered undervalued. And generally, prices that are under will come back into value. Prices that are over will come back into value and then go back overvalued. So the lines that I really key off of here are the third ATR channel, the -3rd ATR channel, the 1 ATR, the -1 ATR. I like to take my trades within the 1 ATR channel. I like to look to sell when we get up to the 3rd ATR channel. If I was short here in the value zone, I would look to cover at the 3rd ATR or go long at the -3rd ATR. So I just wanted to clear up this chart so you could see a little bit cleaner, but the easiest moves you're going to have are from the midline of the value zone up to the 3rd ATR channel, or the midline of the value zone back to the -3rd ATR channel. So that's why I like to try to take as many trades as I can in here, because I have the easiest movement. I have 3 ATRs movement this way or 3 ATR movements this way. Buying up here, that's why I try to stay out up here, because I know, from a technical standpoint, they are overvalued. Doesn't mean they can't continue to go up. They often do, but, we play the percentages. And so, here you look at Apple, It's above the 1 ATR channel. It has a higher, currently we have a lower high right now, so nothing for me on Apple today. Silver, we do have silver. We discussed that with the 520 crossover, hit one profit target today. Advanced micro devices, again, somewhere here in the value zone would have been the right place to buy it. You can see we got up to the third ATR channel up here and it rejected. About 90% of prices will not go. 90% of prices stay within the third ATR channel and the negative third ATR channel. So once it starts getting up here, that's where I start to want to start taking profits. So nothing for me here. I want this to wait to come back into the value zone. Amazon having a big strong day. It's currently above the third ATR channel. And by the way, if you close above the third ATR channel, it actually is a good sign. Doesn't mean I'm going to buy up there, but it means that it's very strong. And you can see it tested the low of the channel yesterday, rejected it, tested the low of the channel there, rejected it as well. But there's nothing on Amazon for me today. Okay, Boeing. So I am interested in Boeing today, and I'll tell you why. So here we have the 200-day moving average. You can see yesterday we closed below the 200. Now we're closing above the 200. Let me show you a quick back test. This is from etfreplay.com, and I'm using this by permission. So this is very simple. Go long and stay long Boeing as long as it's above the 200-day. If on a closing basis it closes below the 200, get out, wait for it to come back and close back above the 200. But look at the results here. Since 2000, the buy over the 200, sell under the 200 returned 1,080.5%. Buying and holding returned 1,184. So it did return a little bit higher. But look at the drawdown. The drawdown using the 200-day as your stop only had a 42.6 drawdown, and the buy and hold had a 71.5. And it's very, very important to look at drawdowns, not just profits, because if you have a drawdown, that's when people kind of go into this downward spiral. They make bad decisions. They probably sell at the bottom. So I'm very risk averse, and I always look at my risk before my reward. But this is similar, but it's a much better drawdown. So that is why I am going to go ahead and I'm going to buy Boeing today with this close above the 200. My stop will be a close below the 200. If it continues to go my way, I'll just phase all the way out until I'm out of shares, or it closes back below the 200. I will only be taking a half position on this, and I'll tell you why. We're coming from a lower low up to the 200. I would rather here's a lower low. Let's say we go up, then let's say we go back down, then back up. Now we have a higher low. I'll take a full position when I have a higher low break above the 200, but this is a lower low break, but it still looks pretty good. And if you look at the weekly, do you see how we have a V2 on the weekly? A higher low V2. Here's day 1, day 2, day 3, or bar 1, 2, and 3. Bar 2 goes below bar 1, bar 3 looks like it's going to close above bar 1. So this is a V2 on a weekly. V2s, V1s work on any time frame. But I do like when I look at the daily, look, this looks good, break above the 200. Do I want to buy it? Then I want to look at the weekly. How's the weekly doing? It's looking pretty good. So I will be buying Boeing today, 1/2 position with the close above the 200-day moving average. I'll phase out until I'm out of shares, or if it closes back below, take my loss. Alibaba, you do have a V2 here, day 1, day 2, day 3, but it's not legitimate because day 1 is larger than 1 ATR. Day 2 washes it out nicely, but day 3, yes, it confirms closes above day 1's close, but it gapped. So I can't take this. Those are red flags. Caterpillar, big strong day. You guys know that I've been talking about waiting for Caterpillar to get back into the value zone, and it's exactly where it came, but unfortunately it was in the right zone. I just did not have a trigger to get me in, and I'm not going to buy up here at these levels. So if any of you had Caterpillar, congratulations. That's a really nice big day. DDM, boy, look at that go. Just super, super strong. Obviously too high for me to buy here. I have to wait for a pullback, V1, V2. We just talked about Boeing, buying Boeing because it closed under the 200 and back over. Well, we bought DDM here, same approach. We bought here. If I was wrong, it was going to be a small loss. If I was right, I was just going to phase out till I was out of my position, and that's exactly what happened. Boom, boom, boom. I phased out, went sidewards, boom, 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 phased out right to about here. So it was a couple week trade, really nice trade, but nothing there today. Walt Disney, again, we're very high up here. We're at a 68 RSI. I would not be buying this. I would like to wait for this to come back into the value zone in between the green lines at the very least. You can see we did have a nice trade back here on June 3rd when we had a V2. Day 1, Day 2, Day 3. Day 2 washes out Day 1. Day 3 closes above Day 1, rejects the -1 ATR channel. The trade happens within the channel, and this was a nice 4-day trade. We phased out all the way to here. I was waiting for a pullback into the value zone for another trade. It got there, but I did not have the trigger, so I wasn't able to get that. But still, that was a beautiful trade. Etsy. I did buy Etsy back. There is nothing today, but I did buy Etsy back here with this strong break above the 200-day. I took a half position because it was such a large bar. Next day, we hit one profit target, and then it went back below my initial stop, which was the 100-day moving average for a small loss. So, that was my plan. Get out when it closed under the 100-day. Keep those losses small. Keep those weeds out of your garden. So I weeded the garden out yesterday. So nothing today. Facebook. All right. So yesterday, if you remember, we took a pretend short trade on this because yesterday we were above the third ATR channel, above the 70 RSI. We closed below the 70. We closed back into the channel. So I did not really take this trade. This was just kind of a fun trade, a what if trade, but good thing we didn't take it because it is up today, but still under the channel. If I had actually taken this trade, what would be my stop on this? At this point, probably a close above the high there, but like I said, this is not a real trade. We just did this for fun, but nothing there today. Five Below, really nothing there. Gold is up today. It's above the channel. I'd like to see this come back into the value zone in order to take a trade. We did take a really nice trade, again, back in the channel, back here when we have a 520 EMA cross, the same as the silver trade we took. On top of that, we triggered a fractal, which is a high with two lower highs to the left, two lower highs to the right. And it was within the value zone. So we had a beautiful trade on this. 1, 2, 3, 4, 5, about 6-day trade. Profitable trade up to there. Then we got out. Have not been in the rest of this. Google is up a little today. Nothing here for me on Google. We did take a trade here with the moving average crossover, 1030 crossover here. Next day, it rejected the 100, the 200. I got out for a profit. Then we had the strong break above the 200. I bought that, but then next day it immediately closed back against us. So I got out. I did not re-enter the position, but it has taken off nicely. So if any of you have Google, congratulations. I hope that keeps going up. Goldman Sachs, well, above the third ATR channel, 72 RSI, too high for me. Here's a trade similar to Boeing. Closed under the 200, back over the 200. In addition to that, we triggered this fractal. So we did buy here. We had two nice strong days. It then closed below the 70, and so we got out. But that was I think it was like a 3% trade in 2-3 days. So that was good, but nothing today. IBB is the biotechnology ETF. Nothing on this right now at all. Intel, strong day today, monster day today, as you can see. I did not take this yesterday, although that would have been a valid trade, but moved up nicely, just too high for me. The Russell we have, we did hit that second profit target today. Johnson & Johnson. Look at this, everybody. Just remember, this can happen to any of your stocks any day. So please always position size correctly and conservatively because this could happen. We're at a 33.89 RSI. I'm probably not going to mess with this right now. I'd like to see it calm down a little bit. Possibly a close under the 30 and back over might get me interested, but we have earnings coming out soon, but so nothing there. Coca-Cola, a little bit up today. Nothing there. I'd like to see this come back in, maybe down to here, wash out that previous low and look for another swing back. We did take an entry here when we made a higher high. We came back down to the value zone. We had a V2 entry, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. So we did take this. I did get out here. It was a nice 2-day trade because we rejected that previous high and closed under. So that is where I got out. Lockheed Martin, up a little bit today. This has been really strong, as you can see. Nothing to buy here. I'd like to see it come back down into the value zone. We did have a really nice trade on Lockheed Martin. Again, see how it happened in the value zone? We made a higher high. We came down into the value zone. We moved sidewards. We washed out the previous bar's low, closed above the previous bar's close. That was our entry. And we had a beautiful, nice, profitable trade right up to about here. But nothing on Lockheed Martin today. We're just going to have to wait. Things are a little bit too high. And I know it's exciting and it's going up, but you know, the risk to reward ratios are not great here. MasterCard, really nice, big, strong day up here. At 72 RSI, it's just too high for me to buy. Looking at some previous trades, we were above the 70 RSI. Above the third ATR channel, closed below. I did short this here, similar to the Facebook trade that we just looked at. Did go down our way. Then I switched from short to long because we made a higher high. We came back down into the value zone and we had a V2. Day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. We had immediately took off for us. We got out about 50% of our position here, and then we did get out here, but it was still a profitable trade. Merck. All right. So listen, everybody, Merck is fairly interesting here. I did go ahead and sell a put on Merck today down here at the $75 level, expiring on July 26th. The reason I picked the $55 level was because on the monthly, the $75 is just above the 1 ATR channel. We should have some support there. On the weekly, lines up nicely with the 50-week moving average. And then on the daily, it lines up with the low RSI right at the 6th ATR channel and with the 250 down below. I took a minimum position, but I especially took it because we had 2 down bars. One down bar is often followed by another down bar. That's why I waited for 2 days, and it's a good thing I did. So as long as this closes above $75 by January or July 26th, I will be able to keep all the premium. Otherwise, I will be expected to contractually, I'm going to have to buy my shares here at 75. But based upon what I just showed you, I don't mind buying them here. Microsoft. Nice little uptrend, but nothing there for us today. Netflix, Netflix went up, tested the third ATR channel. It's coming back into the value zone. So next week, this might be interesting. If it goes down, moves sideways, spikes down, gives us a V1 or V2 to the upside, but nothing today. Nike, moving strongly, having some issues with that third ATR channel. Philip Morris, of course, we did buy Philip Morris 2 days ago with this break above the 200 and the V2 entry. That's moving nicely for us. PayPal, nothing today. We did buy PayPal here when we made a higher high. We came into the value zone. We had day 1, day 2, day 3. Day 2 washes out day 1. We entered here back on the 28th, and you can see this was a wonderful, beautiful trade from here. I did exit here when it rejected the previous day's high. That was the flag. A little higher, but not too much since we sold it. But that was a great trade. That was over 3%. The Qs, again, too high at the third ATR channel. Can't do anything with this. I want to wait for a better setup like we had back here on the Qs where we closed under the 200, closed back above the 200. If I was wrong, I would be wrong small with even a penny close below the 200. But as it turns out, I keep it as long as it's above the 200, and I phased out. I phased out, phased out, phased out, moved sideways, phased out, moved sideways, and I did exit the entire position here. So think about this. Very small risk if I'm wrong. Big win if you're patient and you let it grow and you're right. So nothing there. The SPY, we talked about that. Going to be buying that at the end of the day. Square, big day today and the last 4 days. Unfortunately, did not have any of this. I was waiting for it to come back into the value zone. It did, but when it triggered, it was too high. Just because it goes to the third ATR channel does not mean it cannot go any higher, but most of the time, statistically, it won't. And, we play the averages and we play the odds. So sometimes, it beats the odds. And in this one, it did. SSO, again, everything's up at the third ATR channel. This is a good example of a trade where, when you go under the third ATR channel and then back over, under the 30, back over the 30, similar to Facebook, but Facebook's the opposite because it was based upon the plus third ATR and the 70 RSI. This is based upon the negative ATR, third ATR channel, and the 30 RSI. So we did buy this right here back on the 3rd of June. Any close below the 30, I would have been out. But look at this beautiful trade, right? Our risk was very small. We didn't know this was going to happen, but we stayed with it. We gave it some room to breathe, and we exited, I believe, right here. But nothing today. Let's be patient and wait for the market to come back into value. TLT, well, it's down near that third ATR channel. This is I took a short trade right here because we had a high, we had a higher high. Here we have tall MACD bars. Here we have no MACD bars. This is generally bearish. I did short here, immediately went against me, started to go back, and I did have to exit my short here because that was my plan. That was my stop. Took a small loss on this. Next day, I was really glad that I got out, and then it's come all the way back. So this happens, you'll pick a direction on something and you'll get stopped out, and then a week later it will have gone your way and you won't be in it, but that's just part of trading. All right, Tesla's having a nice move here, getting close up there to the third ATR channel, 67 RSI, nothing on that for me. Twitter, it's had a really nice strong move. I know Mount Doji bought Twitter. I can't remember. I think it was here on this higher low V1. And I can't remember if you got out of that or not, Mount Doji. Let me know. I'm curious. I got that mixed up with Square yesterday. I know you had Twitter, not Square. So nothing there today. Natural gas, nothing on natural gas. Oil did close above the 200. I didn't want to buy it up here because even though it closed above the 200 and triggered that fractal, it happened in this area. And when you get up to that third ATR channel, you're pulling the rubber band pretty tight. So nothing there. The dollar, we hit that third ATR channel coming back into value. So this might be something interesting to look at in the future. VIX is definitely below the 30 RSI. So I will be exiting VIX as long as it closes under the 30, which it looks like it's going to. Verizon. All right, so I am going to take a half a position on Verizon here, and I'll tell you why. We did buy it here, phased out of a little here, and then we took a loss on that. Luckily, it was a half a position, but that was that was not a good trade. But luckily, it was a half a position. I am going to buy Verizon here, and I'll tell you why. You see this triangle right here? What this is indicating is that I learned this from Larry Williams. The previous day's bar, you see how we have the high of the previous day's bar? Well, this bar here went above that high and reversed. That is bearish. But if the stock is strong enough to then go back above that high, it paints the triangle. It's called the fake out bar. So I am going to buy this today. This is a pretty good signal. And I do like that, we're kind of in this sidewards movement here. And I like that today we went back above all the moving averages, the 5, the 10, the 20, the 50, the 100. And more importantly, it rejected this area up here and then rejected this high and was strong enough to come back. So I am going to buy a 1/2 position again on Verizon. My stop, my initial stop, is going to be a close below the 50 and the 100. I'm going to give this a little bit of room to the downside because we have a lot of potential profit to the upside, and I do like the price action of again having this high, this exceeding the high and reversing back, but then today being strong enough to go back above that high. So hope that makes sense. So a 1/2 position, and it's smack dab in the middle of the value zone, which is also a positive. Energy. Well, it is breaking above the 200-day, which is good, but it's just too extended from the value zone for me. Financial Select, just moving on up, but like everything else, it's too high. Real estate. Well, here we go. Real estate is now coming back down into the value zone. So let's see if it can hold in the value zone for a couple days, spike down, reverse, give us a V1, V2 for a possible ride back up, but nothing today. XLU, utilities. Again, we're back in the value zone, possible V1, V2. Healthcare did reject the -1 ATR channel. I'd like to see this move sideways for a while, show that there's some support, show that there's no more supply coming in after these 2 big down days, and then maybe get a V1, V2 back up, a rejection of the -1 ATR channel and a trigger back up into the value zone. And all right, so look here, this is a new addition. This is Spider Pharmaceuticals. Well, we've come down from really high prices back into the value zone. This is positive today that we did reject this -1 ATR channel. It's possible it could trigger a V1, but this bar is too big to trigger a V1 against. So not going to do anything with this today, but watching it in the future might be interesting. All right, so that leaves us with Boeing. I did sell the put on Merck, and if after the market closes, you guys, if you have any questions about why I sold that, please let me know. And Verizon. So I already have these programmed in to buy and sell. It does look like I'm going to have to get rid of the VIX. That's our one loser today. So let's just quickly go back through our current positions and see if there's anything that needs to be managed. So the 1 profit target on AGQ, but the 5 is still above the 20. So that one's fine. IWM hit the 2 profit targets. The 10 is still above the 50. Philip Morris is acting nice, so we'll keep that. SPY, we're going to buy that at the end of the day as usual. And then VIX is at a 29.56, so it is possible that this could hold. So just have to see at the end of the day. That one's going to be touch and go, so I cannot program that in to immediately buy. So let's see. Johnny says, I am more buy and hold, so a lot of my work is managing stop losses. That's the most important. That's the most important thing to manage. You know, you might slough off a little bit on the profit targets, but you can never slough off on the stop losses. It's important. Mert says, if you have V2 formation below 1 ATR, do you trade it? The ATR line looks similar to Bollinger Bands, and I think V2 might be a good sign for the stock to take off from the lower band. Any ideas? Well, I like V1s and V2s to form near channels or moving averages, but generally, if it's between the -1 ATR channel, but not yet quite to the -3 ATR channel, I really generally won't take it unless there's another moving average that is intersecting. So when the V1 or V2 triggers, it's above a moving average. But, you know, just to make it simple, the best V1s, V2s happen when they trigger within the 1 and the -1 ATR channel. You know, if you have a V1 or V2 that triggers at the the third ATR channel, that's also good. If it's at a 30, if a V1 V2 triggers at the second ATR channel, I probably wouldn't take it. But just to simplify things, the best V1s V2s happen within the 1 and the -1 ATR channel. Hey, Scott Montgomery, happy Friday to you too, man. Good seeing you. Thank you for coming by as always. All right, we got 5 minutes. John, hey, how you doing, John? John says, would you consider puts or calls in the third ATR? Yes, I do. I do factor that in to when I generally don't buy calls or buy puts or sell calls. I generally just sell puts. But yes, that is definitely, I do consider the third ATR channel. So I like when the third ATR channel maybe lines up with the 200, also lines up like a 30 RSI. And then on top of that, that you have confirmation of combinations of things, not just on the daily, but on the weekly and on the monthly. So I can get into that a little bit more, John, when the market closes. Frank, how you doing, Frank? Good to see you. Patience pays. Had a nice jump in UTLA. Nice. Appreciate your looking out yesterday. That was ultra. Woo! Wow. That's nice. So Mount Josie says, thanks for BA. Yep, Dr. Jorgensen. Oh no, I just switched to Spectrum from Verizon. Now I have to switch back. That's right. You got to get on. You got to take one for the team, Bruce. Get back on the Verizon bandwagon. And John, how you doing, John? Nice to see you. How trade VIX? TVIX? No, I trade VXX, John, the ETF basically for VIX. And speaking of VIX, it does look like it's going to close below today, so we are going to have to get that out of there, but that's okay. We've had a nice green day. So I guess I better turn my attention to managing these last positions, huh? Okay. Well, I have 3 minutes, so let me get this queued up here. And I already have the orders in to buy Boeing and Verizon and the SPY. Yep. I highly doubt the VIX is going to come back, but we'll hang here for a second. Wow, I kind of spaced off there. All right. All right, so we have less than 2 minutes. Just got to watch that SPY. Thanks, Bruce. I will have a good hike. Have fun golfing today. I'll talk to you later, huh? And while we're waiting, just make sure that if you have like 1,000 shares of something that you're selling, make sure it says 1,000, not 10,000. Trust me, it's happened to a lot of people. It has happened to me. You know, you're so used to trading that you just go through and do these things quickly, but sometimes your thumb's a little heavy and it hits that zero twice. Makes a big difference. I have to tell you guys a story about when I went to sell 1 contract of the yen and I ended up selling 100 contracts of the yen. This is in futures, by the way. So if you guys trade futures, you understand what a big mistake that was. It actually turned out okay, but my gosh. All right, so we have about 50 seconds left. Everything is okay except for the VIX. And then after the market closes, everybody, just let me know if you have any questions about what I talked about today, and I will do my best to answer. All right, so we've got about 20 seconds. All right, I'm going to just go ahead and
Order
sell
partially
the
filled.
VIX.
Order filled.
And sell the VIX.
Order partially filled.
All right.
Order filled.
And then all of our automatic orders are going to...
Order cancelled.
There you go. That's what
Order
it
filled.
was. All right. So anyway, nice green day today. I'm always happy for that. Appreciate that. So listen, before we get to questions and answers, I do want to just put in a quick little plug, let everybody know that I do offer private one-on-one teaching and coaching and mentoring lessons in the nighttime via Skype. So if you'd like to work with me one-on-one, if you feel like it would help your trading, which I really think it will, it's always good to work one-on-one with somebody. My email and my hourly rates are in the description of this video. And, you know, generally it just starts when somebody reaches out, it just starts with the free phone call. I just want to get to know you a little bit better, understand, you know, what your approach to trading is, how you got into trading, what have been your challenges, what your goals are, and and then I'll put together, you know, a customized lesson plan to help you achieve those goals. And, you know, if you do become a client of mine, you know, after I teach you or after I put together a plan for you, you know, I really make you teach it back to me. That way I know that you know it. So anyway, if there's of interest, my email's in the description. You can reach out to me on Twitter as well. And then also, if you like this channel, you know, please subscribe. I really would appreciate it. And also, if you could hit the thumbs up button, it would really help me grow the channel. And, you know, the reason I started this channel was I wanted to share, you know, what I've learned over the last 24 years as a professional stock trader and money manager with the people out there that need it. There's a lot of people that have a difficult time trading. It has a negative effect on their life. They're losing a lot of money. It makes them depressed. And you know, let's help those people. If they can find the channel, maybe they'll learn some of these good concepts and turn that around. So anyway, okay, that's enough of that. But let me just go and check and see if anybody has any questions for today. Hey, Michelle, thanks for coming by. That was a nice surprise. I hope you have a nice weekend too. Thank you. Thanks, my friend. All right. I'm trying to look here and see, did anybody have any other questions? So AVGO, let's look at AVGO. So it was a good day today, no doubt about it. And you see the little green triangle, the same triangle we took with Verizon. Here we make a high, we go higher, but then close lower. But the next day is actually able to go above the high. That's the same pattern, Mount Doji, that we took with Verizon today. So hopefully we'll have the same result. You know, taking this here based upon that pattern would have been okay because your risk to reward was pretty good. But now with this big bar up here, looks like we did close above the 100, but we've got that 1 ATR channel above this. I don't think I would buy this here, actually. Just based upon what's happened. I mean, it certainly could go up, but you know, if it came back down in the next day or two and backfilled a little bit, maybe came back halfway, kept above these moving average, then your risk to reward would be better. I just feel like it's a little chasing here. So just my opinion. Murat says, why do you buy all of your stocks just before the close? So, you know, Murat, my opinion in the market, and not just my opinion, but a lot of famous traders and great traders that I know, I learned this from them. They believe that the prices near the close of the market, as close as you can get to the close, are the most valid prices of the day. That's when the money managers and the market makers take over the market. The prices that you get during the day, just intraday during the day, just a lot of noise. They call the price at the end of the day the lie detector of the market. They actually call the last hour the lie detector of the market. So because the professionals are moving the prices at the end of the day, and my theory is that I would rather be in the company of the professionals making buying and selling decisions than with the amateurs during the regular part of the day. So that is why. And also, the other thing too is the volume is very high. The bid-ask spreads shrink, so you don't have as much slippage, but mainly because the large money managers, the large financial institutions, the market makers are controlling the market at that time, and they're putting it into its proper place. So that's why I make my decisions then. Johnny says, I can't stay for Q&A. Have a good weekend. Hey, you too, Johnny. Thanks for coming this weekend. I appreciate it. Hope you have a nice weekend as well. Mount Doji says, I didn't hop on AVGO. It looked better during lunch. Yeah. Yeah, I look at this and I just feel like it's chasing. Who knows? It might go all the way up to there. I have no idea. Where did Google finish? Okay, and Apple finished at 155. So we did buy Boeing. Let's take a look where we bought old Mr. Boeing. 57.19. This is a half position. Oops. No wonder it didn't show up. 365.33. I was looking at Verizon. All right. So we're out of VIX, and then Verizon we bought today at 57.19. All right, and that doesn't look right. And then we bought our SPY again at 365. Right at the close. Boy, that seems high. But the plan is take your signals, and that's the signal. So we'll see what happens. All right. So yeah, so we have silver, we have IWM, we still have our Philip Morris, we re-entered SPY, we got rid of VIX, that's our one loser today, and Verizon we entered based upon the confirmation of the triangle, the high, the higher, and rejection, and then the move back up. So Mount Doji says, thoughts on SLV. So we're in AGQ right now, Mount Doji, which is silver. It's just the double leverage silver. The reason I took the AGQ trade and not the SLV trade was the 5 never crossed under the 20 and back over to give us an entry signal on silver. So, just looking at silver here, would I buy it? Probably not. I mean, I don't really see anything here. If you look at AGQ, it's going to look somewhat similar, but we did actually have the cross under and the cross back over on AGQ. So that is why I took it. But as far as SLV goes, no, I wouldn't take it because I really don't see any interesting. What did you see on there that was interesting to you, Mount Doji? So yeah, interesting day today. Big, 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 strong day. Dow was the clear winner. Um, did pretty well on that, selling that put on Merck so far. We'll see. Knock on wood, right? So, all right, last call for questions. But in the meantime, thank you, Mount Doji. Thanks, Scott Montgomery. I appreciate it. Thank you, Johnny. Good seeing you. Murat, thank you for coming again. Michelle Champneys, nice seeing you. That's a friend of mine here from Utah. Dr. Jorgensen, good seeing you. John Freitas, hope I'm pronouncing that. Apologize, John, if I mispronounced that. Thank you for coming. Nice to see you. Hope you come back. Frank, really good seeing you. I'm glad that Ultra took off for you. That's great. John, it's nice seeing you. Appreciate you coming. But yes, I do factor in the third ATR channel when it comes to selling puts. Scott Montgomery said hi. Murat said hi already. Steve Burns, thank you, my friend. Appreciate you coming. Thanks again for the mention on Twitter today. It's really an honor to be associated with that group. And if you guys have not been over to Steve Burns' website, I would really recommend it. It's newtrader.u. He has such good information over there. Here it is, newtraderu.com. He has trading courses. He has a 3 time a week analysis of the market. He posts, look at all these great articles and videos and stuff on all sorts of different trading stuff. So listen, if Steve Burns says it, I would listen to him. And then his Twitter handle on Twitter is @SJosephBurns, right here, @SJosephBurns. But he publishes great stuff over there. So do yourself a favor, learn some more about trading by going over to his site and his Twitter channel. And then Andy, good seeing you. And Chris F, happy Friday. Thanks for coming. And I think that is it. So good week. Thanks for stopping by. Go out and do something nice for somebody today. Just a wave or a smile or hold the door or something, right? There's a lot of negativity out there, and why not do a little something that's free that could help somebody's day, and maybe they'll go on and do it for someone else. So, all right, that's about it. If you guys have any other questions that you can't think of today, feel free to email them to me or send me a message on Twitter. And I'm going to get up in the mountains, go for my hike, and hope to see everybody on Monday during the last hour of the market. So thanks again for coming, everybody. Take care, and we'll talk to you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.